best Nigerian stocks to buy during CBN rate hikes. The CBN had recently increased interest rate by another 150 basis points. So in this video, I'm going to share what that means for stocks and then how to trade stock, where to buy your next stocks, and what to do right now. Why? Because generally it is perceived that rate hike is bearish for stock market. Rate hike is not good for stock because it's like you giving us free money and then you are now asking us to go put our money in a risky asset. It doesn't work that way. If I put my money in treasury bill and treasury bill is going to pay me at least 20 to 30, 20 to 25% on average, then why trade stock? So in this video, I'm going to share some of the stocks that I'm buying and how I still take advantage of opportunities in the stock market. The stock market is not a get-rich scheme. Stock market is a place where you plant and then exercise patience and watch your wealth grow over time, especially if you have bought into the right company. This is not the first time CBN is increasing interest rates. We're used to it. In last administration, when CBN increased rate multiple times, we saw the same thing happen. But then those that keyed into a few stocks that I'm going to recommend, that I'm going to talk about right now, they made a lot of money in the market. So here I'm going to talk about the best Nigerian stocks to buy during rate hike and how to trade the stock market. So let me quickly share this disclaimer. The ideas shared in this video are based on my personal research and calculations. Kindly do your due diligence before you invest in this company stock. Whatever stock I talk about, please do your due diligence. They are not a buy or sell recommendation. Now, the stock market comes with a lot of risk due to uncertainties. Please vet my recommendation based on your risk profile. So let's move on. Now, what is CBN interest rate? What does it mean? So I need to break it down for you, especially if you're a beginner in the market and you're trying to understand this whole jargon, like which one is interest rate again? How does it affect my money? How does that concern me? I thought I'm playing the stock market. So am I giving CBN my money? So what has interest rate got to do with my money? So I want to break it down right now. Now, interest rate basically is the official interest, that CBN rate basically is the official interest rate of the CBN, that's the Central Bank of Nigeria, that determines other rates in the money market and also the economy. So it is actually the rate that drives every other rate in the market. Now, when you put your money in the bank is going to pay you certain amount as interest on your savings. When you put your money in fixed deposits, the bank is going to pay you certain amount on your deposit too. When you go to the bank to borrow money, the bank is also going to charge you for that. That's also an interest rate, right? Now, when you put your money in treasury bill, CBN is going to pay you an interest. When you put your money in bond, they're going to pay you an interest. So the CBN interest rate basically is the determinant, is the barometer that determines other rates in the market. So if other rates are to go up or down, that would most likely depend on CBN interest rate. So like I said here, CBN interest rate drives deposit and lending rates. So the amount your bank is going to pay you when you put your money in your savings account would depend on the CBN interest rate. So if the rate goes up, then the amount they're going to pay you would also go up. But it doesn't mean that they're going to pay you the exact amount. No, it's just a parameter. It's just a driver. Now, the lending rate basically is when you go to the bank to borrow money and then they charge you for that. So the banks will most likely charge you higher when interest rate is going up. Then when interest rate is going down, they'll most likely review it downward. But most times we always know that the banking rate, that's lending rate, is always higher than the deposit rate because the bank need to make money, which is their net interest margin. Now, net is interest income, I mean. Now, when you buy treasury bills, when you buy bonds, the yield on these instruments is determined by monetary policy rate too. That means whatever the CBN is going to give you whatever the CBN is going to give you, yes, will also be based on the interest rate ruling at that particular period in time. So that's generally what interest rate means. So if you want to know the amount you will earn on your savings, on your deposits, or when you invest in treasury bill, you have to look at CBN interest rate. So right now, they are increasing this rate. They've increased this rate initially. They've increased now. This is like a third time in this administration. So the question is, what's the implication for stock? Knowing fully well that this is going to drive the market, this is going to make the fixed income market a lot more attractive. So let's quickly look at certain reasons CBN is actually tightening. So we need to know, why is CBN adopting monetary policy tightening at this period? So here is the reason why is CBN tightening monetary policy rates. So one, they want to strengthen the naira. So a higher rate often leads to a stronger naira against the dollar. Now, if we go to our charts to look at the naira to dollar exchange rate, so you would notice that those periods you can see right here where CBN started the aggressive rate hike, blah, 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 dollar had actually lost ground from almost 1,600. That's an official market, and it touched a high of almost 718 in parallel markets to reach a low of almost 1,000, almost close to 1,000 per dollar. So that's the effect of rate hike. Now, what does that mean again? When you increase interest rates, automatically it makes your fixed income market a lot more attractive. And because we have foreign investors who are always looking for opportunities in different countries, we call them carry traders. In Forex, we call them carry traders. These guys, they borrow money in a country where interest rate is low, and then they put the money in an economy where interest rate is high. So, and then whatever return they get from that high yielding currency, and then by the time they pay back the return on the low yielding currency, then the difference is their own profits. That's the spread. So what they do is they're looking for countries where interest rate is high or increasing, so they can move their money to that country. So that's exactly what is happening right now. So because CBN is making our currency attractive, making our market attractive, these guys are coming in, which is reason CBN has raised, the government has raised a lot of money. At least it was said that the government raised an average of 11 trillion in first 4 months or 5 months of the year due to higher rates. So these guys are coming in because of that. Now, with the fact that they are coming into the economy, they're bringing in money, means they are supplying more dollars. So now, as the countries are washed with dollars because of it, what happened? The price. You can see that's the reason we are seeing we saw this crash. That's the reason we saw this crash. That's the implication of higher rates. And the CBN idea basically is that if they increase the rate and dollar is able to, probably the exchange is able to cool for some while, that would also affect the cost of imports. And naturally, cost of inputs would also go down. That's their calculation. But then there are certain things I'm going to talk about later. So that's the reason they are doing this. So a higher rate often lead to a stronger naira, just like I shared with you. Now, a stronger naira means exchange rate is going down. Do you understand? That's exactly what I've shown you right now. This is it here. Exchange rate is going down. That is stronger naira, and then hence reduce the cost of imports. If dollar cools off to 1,000 to 1,001, down to 900, 800. You know what that means for imports? It means that you don't have to spend much again on your imports. Now, since imports makes up a larger portion of input costs, that means a lot of companies depend on imports, especially manufacturing sector. It means lower production and hence lower prices. That's the idea. That's what CBN is trying to achieve. But the problem is, have they been able to do that? We'll talk about that later. So the next slide is, why is inflation hotter after multiple rate hike? It's important we talk about this. CBN has been adopting monetary policy tightening ever since. They've been increasing rates and all that. So let's also look at Nigerian inflation trend. Nigerian inflation trend. So here I want to show you Nigerian inflation trend. This is it right here. This is Nigerian inflation trend. Currently sitting at almost 33%. Almost 33 plus. Yes, look at it here right here. Now look at the inflation trend. Look at how it's been surging high from 2013. Nigerian inflation has been going short uncontrollably. So despite the multiple rate hikes and all that, inflation is still stronger. Inflation keeps reaching new highs. So you now wonder what is actually happening, because in other economy where they adopt this same policy stance, you see inflation cools off. Like in the US, inflation got to a high of almost 7 to 9%, and then US Fed stepped in. Now, from then till now, at least that's good. But in Nigeria, why is it different? What's happening? So there's a lot. Nigerian situation is totally different from what we have out there. That's the problem they fail to understand. They fail to accept the reality. They just want to use the economic concept. It's not all economic concept that is workable in Nigeria. Nigeria is unique somehow. You cannot use, number one, you cannot use interest rates to fight inflation when unemployment is very high. That it doesn't work that way. So, but then let me share some of my reasons. Now, number one reason why inflation keeps getting hotter after multiple rate hike is rising insecurity. How do you address um, insecurity with interest rates? Now, you know the implication of insecurity. Farmers are being killed, farmers are chased, farms are burned, like so automatically supplies are constrained, supply is affected, output is automatically affected. So how do you explain connection between insecurity and interest rates? It doesn't work that way. That's why I said that Nigerian economy is kind of unique. So at this point where farmers are leaving, farmers are being chased out of their farm, what you're supposed to do is to see how to encourage them, reduce interest rates, give them access to funds, provide securities for them so that output can be increased. Naturally, we know that if output is higher than demand, then price will go down. So it's not about interest rates. So you cannot link interest rates to rising insecurity. That's number one. Number two, increasing cost of transportation due to bad road network. So there are roads that are bad. You know, people could keep talking about this Lagos Calabar coastal road and why government would have to spend such amount when it's enough to fix the existing bad road. You know the implication of existing bad roads. Transport become in short, they frustrate logistics company and then they will want to add their risk premium, they want to add their cost for the additional stress. So if it will take truck driver an average of 24 hours, for instance, to move from point A to point B, when ordinarily it could take the person like not more than 5 hours, the person will definitely factor in the stress because you're going to burn more fuel. That's additional cost. The stress on the road, insecurity again is also a problem. So that automatically adds up to the reason we're seeing this cost. Because when you go to the market to buy product to resell, your actual cost of that product isn't what you paid for when you or what you paid when you got that product. It also covers any cost incurred during the process of moving that product from the point of purchase to where you need it, to where it's going to be sold, from the cost of transport. Even if you settle security guys on the road, you're going to add that as a cost to you. So whatever cost you incur, so if logistic company is being frustrated because of bad road, it's going to be factored into it. That's number three. SMEs can boost production due to increasing cost of borrowing. Now it's even becoming alarming and it's becoming obvious that these guys cannot access. So how do you improve? How do you boost production capacity when you cannot access money? There are businesses that depend on loan to run, but then you're making loan a lot more expensive. You are killing these businesses just to please foreign investors. And then you want to tame inflation. It's not workable because if these guys cannot produce enough, now we're talking about local production, we're talking about buy the naira, but then you're not even making the naira encouraging because you're already restricting businesses from accessing loans. When you go to the bank to access loan, you'll be so shocked at how much they're going to charge you for interest. So, and the banks also are going to charge an interest that will factor in the risk because it's becoming riskier every day lending to SMEs in Nigeria. So then finally we have lack of sustained export earnings from non-oil products. In short, this is one of the major areas the CBN is not paying attention to. Like I said before, when you boost supplies and we have more than enough in this country, automatically what happens? The price will come down, right? And then if you're not able to prepare the assets for exports and then drive in or bring in more dollar via non-oil revenue, that also will help to boost dollar supply in the economy, which would also tame exchange. So the solution to this exchange, it's as simple and obvious to everybody. But then you wonder why these guys are not seeing it. Maybe they have personal benefit. Well, I can't see, just an assumption. But then these are the reasons inflation keeps surging higher year on year, despite multiple rates high. Look at it right here. You can see from 2020, you can see how inflation has been surging higher from an average rate of almost 4% in 2007 to reach 14% in 2009, and then it got to 15% in 2010. Now, between 2012 to 2014, it dipped to 8%. Into 2016 to 2017, it went as high as 18%. Now, to 2018, 10%. And from 2018 down to 2024, it has moved from an average of 10, 11% to reach a high of almost 33%. And there's no end in sight. So, in between this period, CBN had been increasing interest rate multiple times, yet is not working. So the question is, why is CBN not adopting an alternative method to tame or address this inflationary woe? So, well, it's left for them. I just have to share this insight with you to make you understand that interest rate would not, and interest rate may never bring down Nigerian inflation. It's the point. So, what CBN interest rate means for the stock market. So, let's quickly talk about this. This is the essence of this webinar. This is the essence of this section. What interest rates has to do. Let's look at what it means for you as a stock trader, for you as an investor. Now, like I told you before, when interest rate is increasing, the rate on other markets, money markets, and the economy also goes up. Example, deposit, lending, and other fixed income markets. So when CBN is increasing interest rates, yield on fixed income securities like treasury bill, bond will be more attractive, hence bearish for stock. So if you look at the recent CBN offers in the market, you will notice, I don't know if I can find anyone on nairametrics right now. Let me see if I can find any headline on how much CBN has realized. Yes, look at this here. CBN raises 638.9 in latest treasury bill auction. Yield surged to 26%. Now, in the same vein, you can see right here, CBN increases interest rates by 150 basis points to 26.25%. So because of this move, yield on treasury bill has surged to 26%. So that's the effect. That's the effect. Investors demonstrated robust demand for Nigerian treasury. That's the effect. To attract demand, to bring in foreign currency, to attract foreign investors so that there'll be enough dollar to address or probably meet demand. But for me, I think you are only bringing in hot money in the economy and not foreign direct investment, because what these guys should be doing right now is to probably come up with policy that will attract foreign direct investment in Nigeria and not necessarily hot money. So yield on fixed income market right now is a lot more attractive, hence bearish for stock. So if TB is going to pay me an average of 26%, why would I buy stock? Why would I put my money in the stock market? So naturally, you expect stock to collapse. You expect stock to go down because foreign investors, even local investors like pension fund managers, insurance companies, are going to move their money away from the equities market, which is considered risky, to the fixed income market. Now, the second point is fair value estimate on stocks will be pressured. Now, if you want to value a stock, one of the major metrics we need is the discount rate. Now, the simple method basically is you divide the earnings of that company by discount. Now, when discount rate is higher, so let's assume that a company has an earnings of 3.5 naira per share. So 3.5 naira per share divided by 0.3, assuming it's 30% discount. That means the minimum price the company's stock should be selling is 11.6 naira. That's the minimum. Doesn't mean it must sell that point, the minimum. So if the stock actual market price is below 11 naira, then it's considered undervalued. Now, if CBN increases interest rates, and now instead of using 30% discount, I decide to use 35% discount, which is 0.35, you can see that the price of that stock, the fair value of that stock has reduced from 11 to 10 because of that higher rate. So higher rates often leads to fair value. The fair value estimate on stock will be pressured, meaning if you have to revalue your stocks again, their fair value will most likely go down. So if fair value goes down, then automatically it means that market price will also go down, because a lot of investors would have to shuffle their portfolio or quickly take profit on some stocks that they consider expensive. So that's the second point. The third one is companies exposed to variable interest loan. In this loan business, there's what we call variable interest and fixed interest loan. Now, fixed interest loan are loan that when you collect them, when you qualify for them, the interest rate on that loan is fixed throughout the duration of that loan, up through maturity. So even if CBN raises interest rate or reduces interest rate, it doesn't affect that loan. So that's what a lot of people go for, fixed interest loan. I don't want to be exposed to, but it has its own advantage and its own disadvantage. Now, the major disadvantage of fixed interest loan is that if CBN reduces rates or interest rates, you're still going to be paying higher rates until maturity. But then the advantage is that if CBN increases interest, you're still going to pay the same amount, which meaning it's going to be lower than if you're to apply for new loan. Now, but variable interest loan, it varies. It moves in line with the benchmark rate. If CBN increases interest rate today, the bank is going to revalue your loan. The bank is going to probably recalculate your interest. So you don't pay the same amount on the word variable. You don't pay the same amount till maturity. It's going to be dependent on the overriding interest at that point. So companies that are exposed to variable interest loan might grapple with rising finance costs. That's the problem. They might grapple with rising finance costs. Another issue again is that companies that are also exposed to foreign currency loan might also be a problem if they want to apply for USD loan. Now, bank deposits and lending rates will be higher. So I'm sharing the implication of rate hike, the implication of what happened in the economy when CBN increases interest rates. Yields on fixed income will be high. Fair value on stock will be pressured. Company exposed to variable interest loan would most likely grapple with rising finance costs, meaning that if they're going to be paying interest on their loan, it's going to be a lot more higher. Why? Because rate has increased. Now, when you put your money in the bank, deposit will be higher too. Then when you also go to the bank to borrow, rate would also be higher. So these are the implications of higher rates in an economy. I'm just trying to break it down for a layman to understand. So if you have money in the bank, the interest the bank is supposed to pay you should be a lot more higher than what they pay you before. I don't know what the interest is, but like I said, it doesn't have to be the exact interest that CBN interest rate that CBN has just fixed, which is 26.25%. Now, lending rate too will also be higher. So that means when you go to the bank to borrow money, even if it's not bank, most of this loan app or this personal finance loan, quick money, interest would also be a lot more higher. Like I said, it's a barometer that is used to measure other interest rates in the economy as well as the money markets. So, what are we going to do as a stock trader? What are you expected to do in the market? Because, like I said before, interest rate hike is largely bearish for stock. So here's a strategy that I think would work for you, would make sense. And here's how to pick the winning Nigerian stocks to buy, even despite the rate hike. Because generally, rate hike is not good for stock. If I had to go back to um, the Nigerian stock index, you will see that for some while the index has been pressured. You can see right now, you can see what is happening. The index has been pressured because of rate hike right now. So the market has been trading lower for a while compared to its all-time high of almost 105 or 106. The market touched an high of almost 102,000 basis points. So since then, Nigerian share index have been trading lower because of the attractive nature of fixed income. And it's obvious that investors are moving their money away from stock into equities. But then does it mean stock is bad? Does it mean stock is not good? So here's the smart way to play the stock market. So let's move to the winning strategies right now. Now, why rate hike is generally bearish for stock? Fine, accepted because of the reasons I just shared, because of massive exodus of funds. I'm just showing the reason why it's bearish for stock. Because of massive exodus of funds means people are moving away from stock. The word exodus means exit, you're leaving. So people are moving their money away from that asset. So because of massive exodus of funds from risky assets are like stock. Stock is the perfect example of risky asset. Assets that are volatile, assets that fluctuate, that goes up today, comes down tomorrow. They call them risky asset. Now, people are moving their money away from stock into risk-free assets. Risk-free assets are treasury bill, bond. These are assets that your capital is preserved and then your interest is assured at the end of the period. So when people move their money away from risky asset to risk-free asset, I think sector players will actually outperform the market. So the best strategy to adopt is to be a sector player, and I will explain what that means. Now, sector players are investors who are able to spot opportunities in an environment with rising rates like Nigeria. So if you're a sector player in the market, it tends to shape your mindset. Now, there's a question every sector player would ask. If you're a sector player, sector investor, or sector trader, there's one simple question that they always ask in their head: who is benefiting from the current situation? Do you understand? So no matter how high CBN increases interest rates, there would always be a sector that is benefiting from it. That's the point. That's the question every sector player will always ask. in the market. And if you look at it, by asking that question, it helps you to position your mind away from problem into why others are seeing problem, why others are seeing a bearish market, you are seeing a bullish potential. You are seeing an opportunity to grab into a bullish stock. So this is how a sector player thinks. So let's look at three scenarios. There are three types of stocks that I think you should be buying if you're going to be play by sector. Three types of stocks you should be buying in a period where there is high interest rates. These type of stocks, they never fail, either for dividend or capital appreciation. They don't fail. Some of them could even give you both dividend and capital appreciation. We call it dividend growth stock. But these three type of stock that I want to share with you, they don't fail. And I'll share examples. I'll share examples. Now, first one, best Nigerian stocks to buy. Now, since a higher rate is bullish for fixed income assets, which we all know, right? When rate goes up, yield on treasury bill, yield on bond, and all that goes up. It therefore means that sectors that are largely exposed to interest income with efficient ratio below 40 will benefit. So it means number one, sectors that are largely exposed to interest income. What does that mean? It means that sectors or companies that actually benefit, that has a line item called interest income on their profit and loss, they are actually companies that are also exposed to fixed income markets. So if fixed income is going to increase, and I know that in the stock market, there are also companies that buy a lot of these fixed income assets. It means that their return, their profit will be a lot more higher because the rates they are going to be earning from their fixed income exposure will be a lot more higher. So that means sectors that are largely exposed to interest income would definitely benefit. No wonder banks, insurance companies, investment stocks are posting double-digit quarterly growth year on year. Now, if I go to the Nigerian Stock Exchange website and I look at the result of all the banks so far, let's even look at the recent ones like EcoBank. EcoBank has just recently released its result. So let's look at EcoBank right now. Now you will see it was almost all the banks delivered outstanding results. Almost all the banks. Why? Because of higher yield, higher rates. Higher rates is extremely bullish for banking stocks. Why? When you go to the bank to deposit money, they're going to pay you interest, right? Now, when you go to the bank, the same bank to borrow, the bank will charge you more. Look at the interest on borrowing, interest on loan from bank compared to interest on savings, very high right now. So that's the implication, that's the effect. So here I'm looking at EcoBank's book right here. So let's look at a break. Now this EcoBank record, gross earnings went up in Naira terms, 103%. Revenue went up by 205%, profit after tax. But I want to see a breakdown of that income. Now, here is the breakdown. Look at EcoBank results. This is interest income between 3 months ended March 2024 and 3 months ended March 2023. That's 3 months, 3 months. Now look at interest income. Interest income went up by, that's in dollar term, by 1%, 453%. And then net interest income, you can see here, 285 to 239. Now this is most likely in USD. So let's see if we can find the Naira report. Yes, yeah, this is it here. Now look at Naira reports here. Net interest income went up by 194%. Look at it here. It's very clear right here. Can you see? 194%. That's the interest income. I mean, not net interest income. Now you can even look at the breakdown. Interest income using effective interest rate method. Here, other interest income and interest expenses. So this interest income here is made up of loan and advances to customer and also investment in securities. Now look at 194% from last year to this year. This is the same period CBN is increasing interest rate. Now look at net interest income, which is different between interest income and interest expenses. Now, no wonder we would even see interest expenses go up. Now, at the end of the day, net interest income, which is the bank profits, or the bank, yes, that's the profit basically. What you earn from lending and then what you pay from getting them to deposit with you. Now you can see 217%, which is in net right here, 217% increase. So that is the result. That's the effect of interest rates on banking stocks. Even GTB posted most 600%, Zenith Bank, most 100 or 200%, Access Bank, UBA. Go and check their results. They all came out with big numbers this year. They all benefited from interest income. And interest income is largely driven by interest rates. So I'm also expecting the same thing in insurance and investment stock. Even in the community, I've started schooling for certain investment stock and also certain banks that I think will do well. And now the advantage is that if these banks are going to do well, it means you should be expecting bumper dividends this year. So while others are running away from stock, you should be positioning yourself on the good ones, on the stocks that are going to benefit from interest income. In short, let me even share the there's one stock that I'm going to share with you. It actually passes the second and thought about stock. That stock was also boosted by interest income. So when others are running away from the market, you think smart, think like a sector player. A sector player would always go to that sector, always go for opportunities. You don't see problem because you know that there will always be a sector that is benefiting from that trend. If you go to check other banking reports, let me even try one and again. Let's look at the bank. I don't know if there's a banking report here. There's Jais Bank here. Let's look at I'm seeing Fidelity. I don't know if that's a financial report here. Okay, let's see if we can find um another banking stock, random banking stocks here. So I want to see if I can find a banking stock right here. Okay, this is Access. Let's see Access results. The idea is just to show you how CBN rate hike also creates opportunities in the market because the same fixed income assets that you're running to, why not buy into companies that are exposed to the same fixed income assets, knowing fully well that they will do well. Now, I'm not saying fixed income asset is not good. It's perfect. In short, have a diversified portfolio. I'm also investing in fixed income assets too. So, but then I like to also use the stock market to take advantage of opportunities because I know rallying in stock market can be a lot more profitable than the physical market. So if you're able to pick a good stock, you find that. So let's look at Access Bank financials here. Same Q1 results. You see interesting numbers. You can see here from 250 in 2023, first quarter 2023 to 608. This is interest income. Can you see right here? Interest on financial assets from 3.2 to 111. This first one basically is on loan. This is on investment securities, interest expenses, and then at the end of the day, net interest income went up from 95 billion to 275 billion, almost 100%. So you would find good stock in the market if you go by sector. So if you go with banking, insurance, investments, especially ones that are posting double-digit quarterly growth year on year, you would definitely find opportunities in those companies' stock. But the only thing is, don't jump on them immediately. Make sure you buy them at oversold price. I have a video course on Millionaire Stock Trader. How do you find stocks that are oversold? I discussed that on that particular course. If you go to coachoge.com, you'll find that course on Millionaire Stock Trader where I shared insights on how to find an oversold stock. If you go to my course platform and then you click on courses, if you click on courses, just search Millionaire Stock Trader. You find that course. It's a course that will take you from fundamentals. This is it here: fundamentals, sentiment, and technical analysis. So in this course, I talked about how to find oversold stock, and I'm looking to even add more video to this because of a lot of changes in the market. So that is how to find good stocks in the market in a period of rising interest rates. Look for companies that are benefiting from interest income. Now, I talked about efficiency. Efficiency here is referring to companies that their operating expenses is not up to 40% of their total revenue. Operating expenses is not up to 40% total revenue. So this is what I mean. Now, if you look at total revenue of assets right here, the total revenue here is net interest income plus net fees and charges. Here, net fees and charges, yes. So this will give us 252 plus 86. So 252 plus 86 will give us an average of like, let's say 330 something. Now, if you then come down to the operating expenses here, this is operating expenses. So if you add this and this together, so yes, operating expenses, you add personal expenses is there. You add this other operating expenses here. By the time you add them, divide it by that figure. So it shouldn't be up to 40%. It be up to 40%. I'm working on a course on how to analyze banking stock. There we'll talk about efficiency, how to find banks that are efficient. So it's always said that a bank should not spend more than 40% of the total revenue on operating expenses. That's an efficient bank. And that's one of the things that makes it to be one of the most profitable banks in Nigeria because efficiency is below 40. I think an average of 30%, while other banks are probably hitting 50%, some are hitting 40%. UTB seems to be lowest, but I've not checked their efficiency ratio recently based on their Q1 results. If I see that, I'll most likely update members of my community. So that's the first type of stock you should be buying. Buy banking stock, insurance stock, investment stocks that are posting double-digit growth year on year. They are the stocks that benefit from because of this fixed income market that is going to be a lot more attractive. People are running to these guys are actually the biggest investors in that market. They invest in billions. So meaning that their interest return will be a lot more higher. So don't be surprised if the 2024 result of these companies are extremely okay, are monstrous, are significant, and are perfectly are far above 2023. You shouldn't be surprised because of this rising rate hike. So when others are running, now you know the sector to focus on. Now, in this sector, I'll be recommending some stocks. It's not the stocks in that sector that you should buy. One of the danger of jumping to buy into stock based on fundamental analysis is you might end up buying at a higher price. So learn to buy fundamentally sound stock at an oversold price, at oversold region. This is what I do in my community. So if you join my community, you're going to some of the stocks I'll be recommending are stocks that are still low, stocks that are downside risk is very low and upside potential very, very high. So don't just jump into these banks that I've mentioned and thinking they are buying. Some of them are actually overbought, and you might be buying them as an at the top of the market, which means you might be at risk in the market. But then you just have to know the idea is just to give you direction on where to be looking or where to look at in the market. Second type of stock we should be looking at is since a higher rate means that companies that are largely exposed to debts, just like I told you, then would have to pay more for borrowing, which would add more pressure on profit after tax and earnings. Let's stop there. I talked about companies that are exposed to debt, especially variable interest loan, even fixed interest loan, because when you go to the bank after rate hike, banks are going to charge you more. Now, if these guys are going to be paying higher interest on their loan and all that, then it also means that stocks that have zero debts, look at the way I marked it. Stocks that have zero debts or less debts that are almost insignificant and are reporting higher return on equity and increasing cash flow from operation will continue to declare more dividend to shareholders. So this is another kind of stock you should pay attention to. Higher rate does not concern me as a company if I am not exposed to debt or if my debt level is very low, extremely low, but I'm reporting huge numbers, huge profits, cash. Because the reason why the market goes down is because investors are pricing in higher interest that companies are going to pay, which will also eat into their profits. And at the end of the day, the bottom line will be lower for you as a shareholder. That's some of the reasons stock go down when CBN is increasing interest rate because finance costs are going to be a lot more higher. And then because they are mandated by law to pay the creditors first, to pay the bondholders, you as a shareholder, you as an ordinary shareholder would have to wait until the company clears its obligations. You're not earning anything. So that's some of the reasons companies that are exposed to debt go down because of this. So what if you look the other way around? Look at companies that are not exposed to debt at all. Like these ones, they don't have any numbers to grapple with. In short, their interest rate is very, very low. So meaning that if CBN is increasing interest rate, it doesn't affect them. Even if the whole market crashes, they will be affected. Why? Because they are part of the broader market. One thing about the market is no matter how good your stock is, it will definitely be affected by the state of the market. So here are some of the stocks that I've considered. In short, when we had our webinar in May this month, May 2024, I recommended Julius Berger. Told them go buy Julius Berger. I shared a lot of insights with them on Julius Berger. And here I want to talk about Julius Berger more. Although the price is already higher than my entry price, Julius Berger just hit new highs. So this is Julius Berger stock in the market right here. This you can see here. Let me expand this. Now, this is, can you see here? So ordinarily, someone would have said, Julius Berger is already high at 68.70. Why am I buying? I'm not buying again. It's already high. But some of us don't buy stocks like that. There are things some of us watch out for. Even if a stock has increased by 1,000%, if all the metrics are still pointing to further upside, why won't I buy? So in our main webinar, I recommended Julius Berger. I told them Julius Berger has broken this key level. I mentioned, in short, my initial recommendation of Julius Berger was around 30 naira for those that have been in the community for you. I started talking about it 30 naira. Now it broke out of 30 naira to reach a high of almost 67 to 68. At 768, I still look at the trend. I said it will still go up. Now, here are some of the reasons I think the GJ Berger is doing well in the market. Now, number one, um, the Australia debt level is less than 0.5. So they are not exposed to debt. My record is showing that their debt to equity is around 0.29. That's the first one. Debt to equity is 0.29. That means the capital structure is tilted towards equity more than debt. That means they are not too leveraged. Number two, when a company is not too exposed to debt, it automatically means that whatever profit is generating will be a lot more higher in percentage term when you compare it with the equity holder. So return on equity is sitting at 19%, which is above my standard threshold of 15%. So that's the first one. So that gives you a better, very solid, put them in a solid position to benefit from this period. So despite the rate hike, in spite of the fact that stocks are pressured, this guy is still hitting new high. Right now, this guy is selling for 85 naira. And there's still room for this guy to run, but this is not a buy recommendation. It's already past my entry price. So if you're going to buy just now, at your risk, not my own risk, because it's already past my entry price right now. So I'm talking about it just to let you know that even in a bearish market, even in a market where rate is going up, you can still find good stock. That's number one. Number two reasons I think Jobela is also benefiting is because they are actually in a sector that tends to benefit again, that tends to be recipient or receiver of government allocations or government spending. How? Look at the trend. Rate hike definitely attract more money into the government coffers because these guys are going to make more money when they sell treasury bills. So let me show you something um, in the market. Let me show you something in the market. Now, look at this headline here. Look at this headline here. Federal government raises 11 trillion through treasury bill in 4 months. In 4 months. In 4 months. This is it here. Federal government raised 11 trillion through treasury bill in 4 months. Now, what would have attracted money? What would have made people to give the government up to 11 trillion through treasury bill issuance? Higher rates. Because rate is higher, rate is attractive. Right now, it's sitting on 20%, 26%. So meaning that more money is still going to be generated through issuance. Now, the question is, what is the government doing with this money? What is the government doing with this money? We know number one major part of this fund will be on infrastructural spending, road maintenance, road constructions, and all that. That is where these guys are playing in. That's where Zubida is going to play in. So meaning invariably, Zubida is also going to benefit from that allocation somehow. But Josmila is managing a lot of projects in Nigeria for the federal government. So by raising that kind of money, they might also be a major beneficiary of that. So I'm just trying to extrapolate. I'm not saying that is exactly how it is, but going by common senses, this market is not a market where you want to go by numbers. Common sense can help you find good stock in the market. So here is Yoruba sitting in a sector that is going to benefit from this flow, industrial sector. So this is why Josbeja might also be surging higher. And if you look at the financial results of Josbeja, quite interesting. Let's look at JBega Q1 results just to explain more of this insights. And then in their book, I also noticed something very striking that because of the large amount of cash they have in their wallet, they are also benefiting from rate hike. So interest income on Josbeja also help to boost their revenue, gross revenue. So that means a lot of reasons are actually behind this surge that Joseph is experiencing right now in the market. So here is Joseph Q1 results. Let's look at Q1 result 2024 against 2023. That's the first quarter result. So this is summary revenue 110, profit after tax 16.7. So no, that's this part. Let's look at, okay, this is Q3 2023 against Q4 2020, Q3 2024. Sorry, I'm talking about first quarter Q1, sorry, Q1 2023 against Q1 2024. So this is just the result. Look at 2023, almost January to March, January to March. Now 107 to 110, marginal increase. Fine. Gross profit 20.0 to 20.9. Look at operating profit 4.3 to 13. 4.3 to 13. Can you see right here? 4.3 to 13. Operating profit 4.3 to 13. And then investment income 750 in Q1 2023 to 4.5. 750 to 4.5. So that means profit for the year went up from 2.2 to 10, 2.2 to 10. Now look at the numbers here. Investment income note 4. How that the company is also benefiting from interest rates. So let's look at note 4 on Julius Berger financials. Can you see here? Interest income. Interest income. And I said something right here that any company that is benefiting from interest income. So this particular trend may not just rub off on banks, insurance companies, even non-banking stocks or non-insurance stocks or non-investment stocks that are also exposed to this interest income. They also tend to experience higher return or higher yield on their investment. So this is also rubbing off on non-finance stocks. But then it's not just any non-finance stocks. Look at non-finance stocks that have zero debt, because zero debt here means whatever profit they generate, they have more to keep as reserve, and then they also have more to pay as dividend. Now, the one they keep as reserve cannot just be sitting in the bank. It has to be doing something. So what they do is they buy fixed deposit with it, they buy treasury bill with it, they buy bond. And for the fact that rate is going up, these guys are going up. So that explains the breakout you just see right here on the stock and why it may be surging higher. So we don't look at stock and say, oh, it's already high. There's tendency that this guy might go up more because from the whole scenarios, it's looking like they are benefiting and more money might be allocated to them on new contracts. So most stocks, Komu Oil has debt to equity of 0.4 and return on equity of 153. NASCON has debt to equity of 0.28 and return on equity of 52%. So do you look at it here? Companies that have zero, almost zero debt, low debt, are not really exposed to rate hike. So these are the companies you should be watching out for. But then I like to add these 2 and 3 together. So the third part of this stock are more or less like complementary to this particular second part. And that third part is, since a higher rate tends to make fixed income markets a lot more attractive, hence bearish for stock. Like we all agree, and we all have said that. It also means that specific stocks that recently broke into new high and missed sell-off should be added to your portfolio. So if the fixed income market is attracting a lot of money, people are leaving stock to go buy treasury bill and bond. And one stock, example of such stock is just, I just talk about it, is breaking into 52 weeks high. Then there must be something, because this is a stock that ordinarily should also be going through sell-off. So any stock that is breaking into 52 weeks high when other stocks are tanking because people are moving their money away from the market, then there must be something specific. So those are some of the things that I spotted, although that's not the only factor. One of the things that led me to Julius Berger was explosive stock. I put all the metrics together and it passes the checklist of explosive stock. And I mentioned it categorically in my community that Julius Berger is an explosive stock. So that's why we bought. So we're just sharing some other metrics you should watch out for. So when a stock is breaking into 52 weeks high or a new high, in a period where people are selling off, then there must be something specific. Is worth researching, is worth looking into. You don't just buy the stock because it broke, no, but you need to now carry out further analysis and find a convincing reason it is important that you find a convincing reason, just like I shared on Just Measure. Find a convincing reason the company is breaking into that new high, or else it might be a trap, or else the company might be hitting a resistance. Make sure the company is not just hitting the resistance that will set it up for pullback. So 52 weeks high can also be a resistance level. So it's a risk. So it's like a double-edged sword. If you don't use it well, you might be hot, you might lose money. But if you use it well, you might make a lot of money. So that's why you must back it up with a convincing reason. So because it's hitting a new high, if it pulls back, what if it's going to experience sell-off? What if it's actually one of the last stocks that dips in a period of rate hike? So you don't want to buy into a stock that will hit you to 2 weeks high and suddenly start crashing. That's why I like to combine these two together. Meaning, if I see a stock breaking into 52 weeks high and I notice that the company has zero debt and are also reporting higher return on equity amidst other reasons in my explosive stock, then it might be worth watching. So they may directly or indirectly be a beneficiary of that rate hike. So most likely that stock might be a direct or indirect beneficiary of that rate hike. And just explain how Julius Berger is an indirect beneficiary of rate hike. Number one is that rate hike helps government to raise money because their bills bond will be a lot more attractive. Now, where is this money going to be channeled into? Infrastructural project. And these guys are well positioned in that industry. That's one. Second, these guys have ample cash in the bank. And then when they put that money in fixed income, they're also going to make money via interest. So it explains why Nigeria is surging higher amidst the whole rate hike of a thing. So in the Nigerian market, even when there's rate hike, always be a sector player. Always think like a sector player because at the end of the day, will help you find opportunities in the markets. Did you enjoy this video? Kindly turn on notification bell so that you can receive more updates when I post more videos like this. Thank you.